Ladies and gentlemen, good evening. Welcome to Foundations of Stocks and Options. Again, tonight we are back, and I am ready to get rocking and rolling because we are going to be talking about trader conditioning, and we're doing it. We're going to be getting into action tonight, and I am ready to do it. I'm sure you guys are ready to rock and roll as well, so let's not spend a whole lot of time talking about how awesome it's going to be. Let's just go be awesome. So tonight, Trader Conditioning Part 2. How many of you guys felt like you had some major ahas Monday night as we learned about the 4 steps of trader conditioning? Did we have some major ahas? Did you guys all get your charting software so everybody can follow along and everybody can do it and play full on as we get into tonight? And I really hope that tonight is a life-changing evening for you. All right, so tonight, here's our whole agenda. We're going to walk through the 4 steps of trader conditioning. That's it. That's the entire agenda, and I'm not going to waste any time because I don't want to be here for 4 hours. I got to be out of here in about an hour and a half, but I got a lot of stuff I want to go through. So let's do it. Here we go. Remember from the last class that we learned about trader conditioning, and what's wrong with my computer? I'm going the wrong way. Here we go. There's basically 4 steps in the process. We've got the drilling phase, we have the speed trading phase, the real-time virtual trading, and real money trading. These are the 4 steps of the trader conditioning. Now, if you need to dig into these deeper and just kind of understand the whole perspective of framework, then you need to go back to the last class, and that class is posted online, so you guys can go watch that. Tonight, what we're going to do is we're going to go into each phase, and we're going to actually do it. So remember the drilling phase, we're going to focus on each aspect of your analysis, and this is the phase that's really kind of flexible because you can either go really fast and be very, very quick, or you can be very slow with it. There's a lot of ways you can do the drilling phase, and each of you, as you work on it, you'll probably come up with various ways that it can be cool for you. But the idea here is to drill your analysis to make sure you're doing it right. This is the entire purpose of the drilling phase. Drilling your analysis to make sure you're doing it right. Realizing that you're trying to get these skills and these recognition skill sets inside your mind so you recognize what's going on. And then, of course, what we're going to do is we're going to repeat it over and over. And the analogy that I use here, and the analogy that I'm going to use throughout the evening, is the analogy of football. And if you're in a practice, let's just kind of go for practice. Take a look at this picture, and you can see they're drilling stuff here. They're just moving from left to right or right from left, depending which way you're facing. And what they're doing is they're not playing against each other. They're drilling different steps. In this case, it's footwork. Okay, and if you've ever watched a football practice, you know that they separate the offense and the defense, and sometimes they'll separate them out even further, and you just work on one little aspect, and you drill that over and over, and then you bring them back together, and you drill the offense together, and then maybe you drill the defense together, then maybe you put them together a little bit there at the end. But the idea of the drilling phase is it's all about practice, practice, practice. Okay, so let's go do it, and we're going to go over to Trade Navigator. Now, you can do this in other charting softwares. Trade Navigator, of course, is the one that we use, and it's the one that I started using years ago. And I think I've been using Trade Navigator now for, 7 or 8 years, and it's a great little software. But if you guys use something else, that's fine. I'm still going to do this in Trade Navigator so you understand what's going on here. And don't forget, you can download this from our website and use it. Use the software indefinitely. But you can use the historical trading data. They give you that for 45 days for free, and then you can decide what you want to do. All right, so here's what we're looking at here. Paula says she can't see. Paula, I think everything is it's broadcasting, so you should be able to see it. If you can't see it, Paula, log out and log back in because it's definitely broadcasting. Okay, so here's what I want you guys to do. Look up here in the upper bar of the software. You see where it says replay. And some softwares call it historical replay. Okay, historical replay. Some just call it replay. Trade Navigator actually calls it instant replay or replay history. And I say either or because they actually call it 2 different things in different places. So instant replay or replay history. Some people call it let me just give you some vocabulary. Here's possible vocabulary. I'll write this up here. Possible vocabulary. Okay, you could call it replay. You could call it historical replay. Okay, you could call it back testing, which actually can really get confusing because back testing can refer to other stuff as well. You can call it back trading. You can call it instant replay. You can call it that function in your charting software that lets you play through the history. I don't care what you call it. The idea is that we're going to go into a historical performance for a stock, and we're going to trade it. So what we're going to do is we're going to click on this historical replay button right up here. It looks like a little film strip. And when we click on it, it's going to bring up the replay settings. Okay, now let me just talk through these really fast here. The first one's the one you want to use. It's the default, called Instant Replay, to quickly replay days or months of past data on a chart. That's the one we're going to do. Okay. Now, if you did streaming replay, this would be tick by tick, session by session, and you would use this for day trading and for intraday stuff. It's much more laborious, much more detailed. In fact, if you don't have the intraday charting, you shouldn't have streaming replay. You should only have the instant replay. Anyway, instant replay is the one you want to use. Now, if you come on down here, you see the symbol. Now, you can select the symbol. You can just type it in here. You see where it's got the Dow Jones in here, but you could type in Apple, and you just hit OK. Or you can quit that. All right. Oh, stop that. I got to... What did I do here? Shoot. I'm trying to get my drawing tool. There we go. You can click the little three dots right here. And if you click on the three dots, what it will do is it will bring up the symbol selector. And you can search through all the symbols. You can do this for any stock. Okay? Pretty cool. You can also select from a group of symbols. Okay? You see right here it says select from a group. So you could select this button. And... you can select from any of these watch lists that you have. Can you guys see this all right? Let me see if I can zoom in. I'm just realizing it might be a little small the way it's translating. Oh, you can see that now. All right, so coming back through here. Instant replay versus the streaming replay. Select your symbol. If you want to do the random symbol from a group, you can click this little button right here. And then, like, for example, you could come down here and you could trade the FOSO, that's Foundations of Stocks and Options, top 10. So we can just randomly pick a stock from the top 10. Then you select a start date, and you can click on the calendar and, you know, go wherever you want to go. We can just go to July 1st. You can do how many, what kind of bars do you want? You want a daily bar? You could do weekly if you wanted to, monthly, go in intraday. We're going to do daily because that's what we tend to trade. And then the strategy here we're going to use is the game mode. You actually can do more complicated versions of this, but that's not what we want to do. We just want to do the game mode. And what that's going to do is it's going to allow us to just back trade and do some historical trading. So I'm going to go, actually, let's just randomly select one from our FOSO top 40. We're just going to randomly do this, okay? So we're going to let the computer randomly select it. We'll hit start replay. And where do we land? Let's see. I don't even know which stock it picked. Did it tell us which stock it picked? It didn't even tell us. See, this is how random it is. I have no idea which stock this is, although it is charted, which makes it a little more complicated because obviously we have some history here. But I have no idea which chart this is. And so we'll just stick with this one for now. And let's say that you've pulled this up. And, oh, this is actually Best Buy. I do see it. It's down here in the bottom left here. So what's happened is you already see the lines drawn because we had drawn them on here already. Now, let's say you had not. Okay, so let's just come in here and annotations. I'm going to delete all annotations. And there they go. Bye-bye. Okay, now we want to chart Best Buy. Okay, so we're going to drill this. Let's say the first step in your drilling, we're going to go through all 5 of the confirmation puzzle steps. Okay, so the first step is the line drawing. So we're going to come over here. We're going to grab our crosshairs up here in the top corner of Trade Navigator. And what I'm going to do is I'm going to draw the extreme top. I'm going to draw the extreme bottom. And I'm going to chart this right here in front of you and with you. Okay, now, obviously, because of the interest of time, let's see if we've got everything, all the time on here we want. Okay, there we go. Okay, so that's all the time we can put on here. It's about 7 years of data. And you notice that the date over here on the right is July 2010. Okay, now you guys know I really don't trade Best Buy. It's not in our top 10, so I don't remember what happened here. And so we're surely going to trade this together right now. Okay, now what I'm going to do is I'm going to chart this. I'm going to come up here from the bottom, and I'm just going to start marking my lines. Now, for those of you who've been saying, I don't know how to draw my support and resistance, how practical is this right here? To come in here to Trade Navigator, go into history, and practice drawing your lines. This is the first thing we're going to do is practice drawing our lines in here. And if you screw up, that's okay. It's really okay, completely okay, because what happens is you're going to see how effective you were, and whether it was beneficial or not. Okay, and let me just come up through here. I'm going to connect the dots, and we might even sing la 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 la. It almost seems like we need music when we do this phase right here, because it's, I just have to talk and fill the dead space while you watch and wish I wouldn't talk. But if I didn't talk, you'd think the webinar was closed down, and it just kind of makes it awkward for everybody. So what I'm doing is I'm just connecting all the lines here, and see some of these, like this particular point right here. Like what I'm looking at, I got a major turning point, but it really didn't connect with a whole lot. And I'm trying to figure out, should I put that in there? See, so in the practice phase here, when you're drilling, you can say, well, I'm going to go ahead and put it in there, and maybe I'll even make a note about whether it was effective or not, and you can come back to that later. Anyway, so I'm just going to come up through here. I'm going to chart my major turning points. If I got at least 2 touches on it, 2 major touches, I'm going to chart it. If I don't, I'm going to leave it alone. And areas where I have major more than 2, I'm definitely going to mark on here. And hopefully I'm getting them all as I'm talking through here and rushing through it just a little bit. But okay, in an area like this right here, see, this is why practice is so good. In an area like this, notice what happened. I'm connecting really, really well right in through here. But over here, I really needed to have it more in this range right through here. So the question is, where do you snap the line? Because if I put it where it's lining up with these valleys over here on the right, those right there, if I put it there, then you follow that line all the way over here, and it's like, well, it's running right through the middle of the price action. Which one's right? If I put it in the top up here, then it's running through the middle of the price action over here on the right. So those are the kind of things that you just do them, and then you come back to them, and you say, well, which one was right? And maybe both of them were right. But those are the kind of things you just practice through. And you always hear me say, as you do these, they'll become more clear. And so that's obviously what I'm trying to help you do right here, is take action and do them. Now, this one right here, I'm going to snug it down just a little bit. What I did is initially I drew it off these peaks right here and realized I was going through the middle of this valley back in November 05. Well, that actually works better as a support. So I'm going to actually just come right off those valleys right there. And then it really lines up well over here, which is more recent time history. Generally speaking, the more recent turning points are more important than the ones that were, say, 5 years ago, because it's more recent. It's just kind of that simple. So the more recent it is, kind of the more important they are. Up and through here, there's the major turning point is going to be right here. So we'll mark that in there, right around 44 bucks. And I'm going to keep on coming up in here and marking away. And you guys have seen me do this before. When you get into an area like this, there's a lot of congestion, that's the word I use. And sometimes it's not as neat and tidy as you would like for it to be. This is a live example, because if I had picked this out for our class, I would not have done one that was, this is actually a little more challenging. I would have done one that was a little bit more neat, but this is still reality, very much so. And those of you who've been through Power Trader and you've watched those classes, you know that it's not always as neat in real time as it is in the textbook examples that we pull out. So this is a really good example to watch and to work through live. Okay, so here we go. I'm going to snap this one up here. It's somewhere right up in there. And now what I'm going to do is I'm going to flip over, and we're going to look at our candlesticks to see which areas actually really confirmed well. And I'm just going to kind of come down here, and I'm going to circle a few in red. This is kind of typical what I do after I don't personally do this on my charts, but here in class, every time I draw one of these, I make a big note to circle these areas that aren't quite as tight, and just see what happens when we go into a candlestick chart to see how things tighten up here and trade right up against the lines. In my personal charting, what I would do is I'm just going to do it, and I'm not going to sit here and circle it. Obviously, that takes too much time. But for you guys, I'm going to circle it so you know what you're looking at. And this is a great exercise while you're learning to draw lines, while you're learning to become a chartist, and learning the skills and stuff that you need to be able to draw a stock chart. This is a great exercise to just come through and say, okay, let me pick some areas to look at. And then as you pick those areas to look at, you can come back over and you flip on your candles and you say, okay, how did those areas change? And so let's change color so we can see which ones we actually want to look at. Notice this major change right here, major. Notice nothing happened really there. Nothing really confirmed up and through here. Nothing changed too much there. That one did for sure. That one on the blue line there. A lot of extra confirmation right there and right there and right there. Up here, look, we got three nice touches on that line right there, right up here. So this really helps confirm several of these lines are exactly in the right spot, which maybe just the line chart didn't help on. Well, then, of course, the next question that people always ask is, well, if the candlestick chart gives you more detail, why would you ever start drawing with a line chart? And, of course, I always say the same answer. The line chart gives you a nice, clean chart to start with, whereas the candlestick chart gives you a little more detail. And so if you start drawing your lines off a candlestick chart, you'll miss a lot of those, and you won't put the lines in there. But just take a look here as I flip back and forth at how some of those areas, especially the ones I marked with a blue arrow, look at how much more clear they are, and how they really came right in line with those turning points, and it really helped codify and clarify that we've got the right support and resistance. Okay, so that's the first step in drawing your support and resistance, is to get your horizontal support and resistance. Now, that right there in and of itself could be a drill. That right there is a drill. Okay, now we could can this and we could go forward, or we could actually go a little bit further, which I'm going to do with you right now. And we're going to say, is there any trend lines on here that we should chart? And so I'm going to draw some trend lines on here. And as you look at this, are there anything obvious that is there anything that's obvious to us? Well, let's come back to the last major turning points up top here. Last major turning point came right in around here, and that's clearly kind of breaking down. I don't know that that's that important, to be completely honest, because yes, we did trade up here in 2005 and 6 and then 7, and we had the major sell-off in 2008. We traded back up here in 2009, but we've already broken bullish here, and I don't know that this is a major trend line or not. We will leave it in there just for argument's sake. We could try to verify that by creating a parallel trend line, and we do that by just double-clicking the line. We'll drag down here, and it does look like that was the trend line that was effective, at least on several levels it was, though I'm not sure it was the major trend. So what I'm going to do is I'm going to take out this line because I don't know how major it's going to be. Let's do this from the other angle, though. Let's look at a bullish trend. Is there a bullish trend in here? And certainly there was one right here. There might be one here. This one might be a little more sustainable. Only a couple of connections on it right now, but that very much is an angle that is sustainable. There's a good chance that that is the trend right there, to be honest. And so we'll kind of scoot that one over, and we'll see as we're starting to zoom in, get closer into a real present time here, whether or not these lines are going to work. Okay, so if this is all the data that we've got, we've drawn our trend lines, we've got our support and resistance, let's go ahead and start trading this, okay? And what we're going to do is we're going to test support and resistance, okay? And as we're testing support and resistance, what we're doing is this chart is starting in July 2010. Well, that's obviously a couple years ago, okay? What we've just done together, though, is we've charted it. Now we want to decide, are we going bullish or bearish? And based on this chart, which direction would you say we're going? And these are the things that you ask yourself while you're doing your historical replay. Now, there's a couple ways you could do it. One is to talk through it like we're going to do right now. Okay, so I'm going to ask you, and you guys are going to tell me, which direction are we going, bullish or bearish? Now, if you're doing this on your own, you don't have to say it out loud. Your family might think you're crazy. You're sitting in the corner of your house or on the couch with your laptop. Bullish, bearish, bullish, bearish. They might think you're crazy. But for the purposes of tonight, I've got several of you saying you want to be bearish, several of you saying bullish. Only a couple of you saying bullish. Most of you are saying go bear. One of you says, James says go either way. A couple of you say go either way. Bullish long term, says Kurt, but bearish overall. Okay, so take your position. Okay, just say it to yourself, I'm bullish or bearish, and we're not trying to keep track here. All we're doing is we're just testing it so you can experience this. And what I'm going to do is I'm going to come over here to the upper left corner, I'm going to use these controls right here. Now let me explain them to you. This one right here is a play button. When you press play, it just starts playing. And it does not stop until you come back and press the stop button, just like a tape recorder, okay? Now the one next to it is just the move forward button. And the way move forward works is it goes forward one day. And to be completely honest, it's not just that it goes forward one day. Let me zoom in really close here and I'll show you exactly how it works. Can you guys see that right there? Okay, hopefully that's big enough you can see it. Now watch what happens when I push the move forward button, we're going to move forward one day. Pushes us off the screen. Great, come back. Okay, first thing that it does is it puts in the opening price. And then when you press it again, I've zoomed in too far. I'm sorry. I've zoomed too far, which means it's scooting me off the screen. Okay, then when you push it forward, it puts in the whole bar. Okay, let's see if I can stay on the screen while I do this one. Okay, why are you taking me off the screen? This is going to tick me off. What have I done to get us off the screen? I do this. Okay, let's zoom back in here. And let me just reset the template. Let's see if that works. Reset the template. Come back. Okay, there we go. Now, hopefully you guys can see that. You see I push it forward and I have one little opening bar here. Let's push it forward one more day and hopefully, there we go. Okay, see what happened? So now I'm going to push it forward one more day and I get the opening bar. Next push forward, I have the full candle. Okay, so you see how that works? So opening bar, then the full candle. Opening bar, full candle. Okay, makes sense? Okay, now, those of you who said bearish, we started this right here in this candle. Those of you who said bearish, you said bearish around $34. We are currently down to our support at $33.16. What do you want to do next? You guys decide. You can close your trade or you can say, I'm going to hold bearish. You can say whatever. You guys are deciding because I'm not telling you what to think right now. I'm showing you how to do the drilling phase. Okay, now the next candle, we get a bullish candle. What do we want to do now? Well, that's at a support level. So some of you might say, hey, I want to switch and I want to go bullish. Some of you might say, I want to close my trade because I got a bullish candle that countered a bearish candle right at my support level. And what you're doing is you're practicing your line drawing to see how effective it's going to be right in through here. Okay, now if you said that you wanted to close your trade at $33, then obviously you locked in your profit. Those of you who held, you're struggling a little bit right now because you're dealing with a loss. Even though it's not a huge loss, you are dealing with a loss. And now what we've gotten into here in the month of July is we've gotten into a sideways move. But now that you're looking at this, you say, well, I've traded back up into this resistance line right here, and I pulled back, and it looks like I might have just broken out. Is this a breakout? And so as you're just drilling this, what you do is you say, okay, that looks like a breakout. Jeremy would suggest that we traded higher and we pulled back and we did not match the lower low here. And now it seems like it's breaking out here. This could be a breakout. Okay, now if you made that connection, great. If you didn't, then hopefully you are starting to make those connections. That's why you practice this stuff, so you can start to make these connections, okay? Sure enough, the next day, look at that. The bulls are running, okay? And it looks like our support has held. Well, now we got a bearish candle. What do we do? And what I'm doing here with you is I'm literally just showing you how the software works so you can come in here and you can test and you can start making your decisions. Okay, now that we've gone this far, I'm going to show you another way that we can do this. Okay, the next thing we're going to do, I'm going to pull over this particular journal. And this journal is in your notebook for tonight. Okay, and what we're going to do is we're going to start journaling this trade right now. And I've got this other application I'm going to try to use. Hopefully it will work. It will actually let my stuff stay on here. So this is August the 4th, 2010. And the trade that we were dealing with was, what was this again? Best Buy. Okay, so we're going to write in here, oh, that's pages. That's why it's not working. Hold on here. I'm going to fix this. Get that one out of there. That's not the one we want. We want this one here. Yes, the formulate. This is the one we want. Okay. Okay, so what we're going to do is we're going to write this data in here, and I'm going to create a journal with you. Now, you don't have to journal the drilling phase, but it can be quite beneficial. It's going to take more time, and you don't have to do it, but it's good to do. And what we'll do in here is we'll put in here 080410. And you say, well, today it's 35.15. Well, based on what we just saw and based on what we've been looking at, what do you guys want to do? 35.15. Do you want to go bullish? Do you want to go bearish? You guys make your decisions. Do you want to go bullish or bearish? Well, as you make your decisions, let's just say, and I'm not saying this is the right trade, but for tonight's purpose, because I'm showing you exactly the way you might think through it, your logic suggests that, okay, we're bouncing up off of support. We've made a higher high a couple times and some higher lows. It looks like we could go bullish here. Okay, now this is not including triggers. This is not including anything else that I've taught you. All I'm showing you is your basics, okay? So you guys get that. And so let's say that we decided, hey, I'm going to go bullish at 35.16. Okay, so we'll come back over here and we'll write that in here. My entry is I'm going bullish. We'll just put a little up arrow at 35.16. Okay, so 35.16, I'm going bullish. Now you can put a target in there if you want to, and you can put a stop. Okay, so let's say that our first target's going to be up here about 36, maybe 36.25. Our next target be up here about 38.50. Okay, so we can just, our first one will be 36.25. And where's our stop going to be? Well, we'll put our stop in here right below the low of this most recent swing low, which puts us in here about $34. Okay, so we'll put our stop in here at 34. Okay, now we haven't exited yet. So let's just see what happens. What we're going to do is we're going to come over and we're going to trade this thing forward. And the next day, we got another doji candle. The next day, another doji. The next day, oh, we're getting profitable. Next day, nope, we're getting close to stopping out. Next day, boom, we stopped out at 34. Now, that was painful. Okay, I don't like losing money any more than anybody else does. We are out of this trade on 8/11/10. We exited at $34. We were in at 36.25. That is a loss of $2.25. Now, some of you feel like a failure right now. You're not a failure. You just learned something, I hope. How many of you see the lesson that you were set up to learn here? Anybody? I will share it with you. Hopefully all of you see the lesson, but here's what I just did for you is a typical beginning trade setup, okay? Typical beginning trade setup would say, hey, I'm hitting support, I'm making some lower highs, some higher lows here, I think this thing's going up, and as it starts to pull back, you're thinking, okay, let's go bullish, we're really going to get in, and you're missing the fact that you've got these candlesticks right on that support level, and it's not going up. So the lesson that I would hope you would learn here would be to wait until the stock had actually started going up. And of course, if you looked at it, you'd say, well, there's my target. My next target's only a few pennies away. This trigger should have actually been way up here, not down here. In reality, on the day we entered the trade, we shouldn't have entered anything because there was no direction for which way we were going. But look at the value of what you just learned, and look at what this little journal did for you. Basic journal, and you say, okay, 8/4, I tried to go bullish at 35.16, ended up losing $2.25. Then you ask the question, why? Why did I lose money? And if we come back and we're honest with ourselves, we missed the obvious signal that we were not in a specifically direct move. We were sitting here on a pivot area, and the stock had not told us which direction to go yet. And so that was the first lesson to learn. And what you can do is you can keep going through and you can test your entire trade for your support and for your resistance, and you can keep running it through here, and you can, maybe you just want to let it play. You use this play function and you just let it run for a little bit here. And as you let it run, you can see what would have happened. How well did the support and resistance actually work? Maybe that's all you want to drill. Just see how well did your support and resistance work. The benefit of using this replay history is you can sit here and you can watch your stock chart form. That's the benefit of it. And so what's great about that versus using real-time charts is in real time, you have to wait. You have to wait 24 hours, or if you do an intraday, you have to wait a few minutes, however long it takes. With this replay history, look at this. We just let it run forward from the time we started here in July all the way through September. The whole thing has taken us about 15 minutes. And look, we can say, okay, I drew my lines. I had some consolidation here. I got burned over here. But look, my support lines worked. If you got nothing out of this other than the fact that you drew the right support lines, how valuable is that? I mean, if I were to sit here and some of you, still thinking, well, I wonder if I believe in technical analysis, let me just try it with you. Let's just run this chart forward. I've drawn the lines. You say, how do I trade the future if I'm just looking at the past? Well, look at this. Is this predictable? Are we trading exactly to those pivot areas? The answer is yeah. Shockingly so. We're trading exactly to the exact same pivot areas. Okay, so that's incredible. What that tells us is it tells us that this is a way that, number one, we can chart the human emotion. Number two, we can put it into a context, a framework. That is our line drawing. We can put it into a framework so that we can come back and we can test it. And we can work with it. And by looking at the historical testing, does this look very much like what it looks like in real life whenever we start trading forward? It looks exactly like it. It's incredible. Do you really get gaps in real life? We certainly do get really get gaps in real life. You know, all the stuff that you experience in historical retesting, it happens in real life. And so this is an amazing way to simulate real life. But look at this. I was just able to let it run forward for several months. And we drew all these lines back here, July 1st. We drew the lines here. Did they work pretty well? They worked pretty well. You know, I mean, okay, we overshot it over here. We overshot it there. We had a gap that was right around that line right there. Okay, we came very close to this line here, traded right back up in there. A lot of consolidation there right on those lines. What do you guys think? I mean, does this give you confidence? Does this give you confidence in moving forward with what you're learning? As you practice it, as you can see that, yes, my lines work, that should give you confidence. And this would be one of the drills that you should run. And when I say run, I mean you draw your lines and you get comfortable believing that your support and resistance lines work. And you do this until you believe in your own support and resistance. And you can journal it if you want to. You can just sit down with, you can either print that journal off that I gave you there in your notebook, or you can just write it on a piece of paper. I mean, honestly, whenever I used to do this, I just got a notebook and I just made columns like this and I just wrote it out. And what that does for you is it allows you to practice your support and resistance. And then as you do them and you say, man, those support and resistance aren't working at all, you can step back and you say, why? What am I doing wrong with my support and resistance? Or maybe you do this particular drill several times and you say, you know what, my support and resistance is just stinking. I got to get some help. And you call Jeremy Newsom, student success coach, and you say, hey, what am I doing wrong here? My support and resistance lines just never look right. Here's the reality. You can do this. I mean, this is not hard. This is not rocket science. But let me tell you what, only a small fraction, only a very small fraction of the people that actually trade the market would actually take the time to practice line drawing to prove to themselves that their lines work. Now, if you just do this right here, if you just practice your line drawing and run the simulator forward until you've proven to yourself that, wow, my line drawing works, then when you get out of the trade simulator and you come back to real time and you see your lines and you're trading on a day-to-day basis and you're in the heat of the battle and you're saying, there's a line there, should I hold or should I sell? Do you think that your mind is going to say, I believe in my resistance line? Or do you think your mind is going to say, there's a line there, but it's not important? You see, by practicing, by showing it to yourself what it should look like, by proving it to yourself that you can do it, you're turning yourself into a trader who's conditioned, literally. That's why we call it trader conditioning. You're conditioning your mind to recognize and to trust your own skill set. Now, that's incredible. And that's the reason most people lose money, because they don't do it. Isn't that crazy? Okay, now let's go another step further. What's the next step after line drawing? Moving averages. So here's what we're going to do. We're going to pick our template. Our template's right up here in the template menu. And I'm going to come down to the Trade Smart Fast Moving Averages. Now, alternately, if you have got your template set up, you notice these little numbers next to your templates? You see those little numbers? Those go along with the numbers on your keypad. That's how I switch. That's how I switch between my templates so quickly. I don't use the template menu. Rather, I press number 1 on my keypad, and there's my moving average. So now what we're going to do is we're going to test this stock just a little bit, just working with our moving averages. Okay, now what's the rules that we're looking for with moving averages? When we're above the moving averages, we're bullish. When we're below the moving averages, we're bearish. Okay, above we're bullish, below we're bearish. That's the first rule. Second rule, we want a moving average cross, and we want to have a good strong angle. Okay, those are the things that we're looking for with our moving averages. Okay, so that's what we're going to watch for right now. And I'm just going to push the simulator forward until we get a signal. Oh, there's a signal. We're below the moving averages. Okay, so the first thing is we are, number 1, below the averages. Now the question is, do we go bearish or do we wait? What do you guys want to do? You want to go bearish or do you want to go wait? Well, some of you are saying bearish and some of you are saying wait. Okay? Well, let me give you my perspective. My perspective says I do have a short-term support here. No, it's not a line that I've got drawn in here, but if I came back and I were to be honest with myself, over the last couple months, that's been a pretty solid support. I'm going to wait. Another reason I'm going to wait is I don't have a good angle. I want to see more angle. So I'm going to wait. I'm going to push this thing forward another day or two. Sure enough, the next day, nothing. Next day, I'm getting set up. I'm ready to go bearish, but what's my problem? My problem is I've got a support here. So I'm going to bring in a couple of additional tools that we would use. I'm going to use our triggers. I'm going to put this little number in here, about 32.90, and I'm going to say if we go below 32.90, I'll go bearish because the trade is set up. My moving averages are separating. I'm getting a good angle. If I get below my support, I'm going to go bearish at 32.90. Does that work for you guys? Make sense for you? Okay, so here we go. Let's keep going forward. Let's see what happens. Boom. One more day. We're at support. Next day. Boom. Oh, we got triggered even though we have a small little candle, and I don't know if it's a good deal. But just for tonight's purposes, let's document it. Okay, that day was February 15. Okay, so we'll kind of scratch all this. We'll go down here. 2/15/2010, we went bearish at 32.88. Or 32.90. Okay, 32.90, we went bearish. Did we want to go bearish? I don't know. We might have, but we're going to find out. Our target's going to be down here about 31.40 will be our target. Okay, so we'll put that in here. Our target will be, oops, I just did that backwards. Oh, and I can't really delete in this software. Let's see if I can. Okay, 31.40. 31.40, there we go. And our stop, where do you want to set your stop? Well, we probably should be setting our stop somewhere up here, like maybe around 33.80. So we'll put our stop in here. Now, in the drilling phase, you can journal, or you can you can journal, or you can just do it in your mind. You could just put it in your chart. If you were just putting it in your chart, I would put the little orange trigger here, and then I would take another one. I'd put it up here where I want to put my stop, and I'd turn that one red, and I'd just say, okay, that's my whole trade set up. And that's a lot faster when you're drilling. You just do something like this right here. Okay, so hopefully that made sense to you. Just because I want to show you how to journal it, I'm doing both at the moment. But this right here is really the speed. This is the fastest way to do it. Okay, so now we're going to push it forward one more day. What happened? Oh, look at that. We're getting a little profitable. Next day, oh, got a white candle. What do? Do I freak out? Well, according to my moving averages, I hold. So we're going to hold. Next day, let's see what happens. Oh, did I stop out? The answer is no, you didn't. You were just shy of your stop up here at 33.78. Okay, now we're going to go forward another day here. And let's see what happens. Next day, oh, we still didn't stop out. We were very close, but we didn't stop out. Let's see what happens the next day. Bears are back. Let's see what happens the next day. The bears are running. Oh, this is getting exciting. This is getting exciting. Are we going to hit our target? And you guys are watching this trade, and you're just wondering, uh-oh, now what? We're starting to round out a bottom here. Do we get out of the trade? Do we tighten our stop? You guys can practice this. The bears are running. Oh, we hit our target. Hot diggity. Look at that. Now, for some of you, what I just did right here was literally the first winning trade you've ever seen. And you just experienced the emotion that you're going to feel in the real world. How? Well, first of all, we got into a trade and immediately it went against us. That's a real problem. It really happens in the real world. But because we had set our stop well, we didn't get stopped out, even though we were right on it. We were very, very close to it. Now, some of you might have set a stop way down here, and you would have lost money. And you would have then seen the trade go ahead and hit your target, and you would have said, oh, my gosh, the market makers ran my stop. But no, the market makers can't run your stop. Market makers can't run your stop. Why? Because there's no market makers here. This is virtual. There's no market maker here. This proves to you that the market maker is not running your stop. If you set your stop too tight and you got stopped out, it's because you did it, not because they were doing it to you. Okay, so that was a lesson that you could have learned there. Now, of course, what happened as the trade started going your direction and immediately came back up and tested that old resistance or old support as a new resistance. In the real world, that might have freaked you out and you might have gotten out of the trade. In the virtual world, you can learn that lesson because what happened just a few days later, we hit our target. Now, did I know we were going to hit the target? No, I had no idea we were going to hit the target. Had no idea. I mean, honestly, I have no idea what happened with, I keep forgetting which stock we're trading. This is Best Buy in February 2011. I have no idea what happened on February, whatever day that was, 2011. I have no clue. But I was able to trade it effectively because, number one, I've done this a whole lot. More importantly, because I've actually done this process right here a whole lot, and I set my trades effectively. Now, does this mean that I never get stopped out and lose money? No, by golly, it's a crazy thought. Of course I get stopped out and lose money. But what we're doing is we're setting the odds in our favor by conditioning ourselves to react accordingly and appropriately to what the trade is setting up for. So, of course, we traded to our target. We took our profits, and if we came back over here, we would journal it if we wanted to journal it. We would say on, turned out it was a few days later, 3/8/2011. No, got too many programs going. So 3/8/2011, we exited the trade at 31.40 because that was our target. And since we got in at 32.90, got out at 31.40, that gives us about $1.50 profit. Even virtually, you love making money, don't you? Even virtually, it's fun to make money. Isn't that great? Okay, so here's what you can do. You could keep going on. And if you were drilling your moving averages, what I would suggest is that you would do this for several months worth of data. And I would suggest that you do it so much that when you see a moving average trade setup, you know how to react. Now, if you guys were to spend, I don't know, a couple Saturday afternoons just working on this, do you think you would know how to recognize a moving average trade setup? I know you would. I know you would. Is it any wonder, since the majority of traders never take the time to do this, is it any wonder that they're not profitable? And yet, if you will take the time to do this just for a little while, do you think that you could learn a skill set that would last you for a lifetime? Okay, now let's move forward. What's the next step? We got our line drawing, we got our moving averages. The next one is chart patterns. Now, chart patterns are hard to drill. I'm going to be honest with you. Chart patterns are hard to drill because it's really hard to predict when they're going to be set up, but you can still do it. And what we're going to do here is we're going to come back to our default template. And you guys notice I keep running the thing forward here, same stock, but I'm still moving with my templates just like if it was today, just like it was real time. Isn't that cool? Okay, so now what we're going to do is I'm just going to run this thing forward, and I'm going to do it in the play mode, so we'll go faster in the interest of time. You can do it however you want to, but we're just going to let this thing run, and we're going to see if and when we see some chart patterns. And because we're drilling chart patterns, I have no idea when it's going to show up. We're just going to sit here and we're going to wait until we see a chart pattern. Okay, so we're waiting, and computer's thinking, and it's doing its thing. It actually runs through the day, kind of the way that the candle formed, so you get an idea of how the candle formed. I'm going to do this even faster just so we can get this thing sped up because we'll be here all night if we don't. Okay, so is there a chart pattern? Do we see a chart pattern, ladies and gentlemen? Potentially. We see a double bottom. Look at that. Double bottom. Now, did it break out of the neckline? It did. It did break out of the neckline. So the question is, do we go bullish? And the answer would be, yeah, based on that, we should go bullish. But, of course, since I let it run a couple extra days here, let's say we came into the trade a couple days late and we saw this long gravestone doji up here. Maybe we would say, well, let's wait and see if it breaks out. So let's do that. Let's put a trigger in here, and we'll put it in here about 31.94, maybe even go to the high of that day. Okay, go to the high. 32.06, and let's just run this thing forward and let's see what happens. Well, sure enough, it's going down, and uh-oh, now what? Wait, stop it, stop the press. Does this mean that the trade is bad? Does this mean that the double bottom was wrong? No. No, what could you see here? Could you see a chart pattern, additional chart pattern forming? Double bottom, breaks out, coming back to retest before maybe does this? And would that also set us up with a flag pattern? Does the volume match the flag pattern? It does. Okay, so I'm calling this in real time. I'm not saying that's what's going to happen, but I'm saying that a lot of people would look at this and they would say the double bottom doesn't work. Whereas I would say, well, no, double bottoms do work, but very often after double bottom, it comes back and it tests. And then it continues. So if this was happening, what we could do is we could say, well, if it does continue higher, it's going to continue way down here. I can actually lower my entry now. Okay, let's just move it forward and let's see what happens. Okay, so we keep watching it. It's testing, it's reversing. Oh, look at that. We got us a winner. Hot diggity. Now, pause it. Do we have another pattern forming? There's a little stair step turning into a flag at resistance. Let's see what happens. Let's go forward one day at a time. It's starting to reverse. We might have gotten stopped out, but our candlesticks told us to get back in. Let's see what happens here. No. Oh, this one's turning into a loser, it looks like. And it looks like this one's going to be a loser. Okay, now, ladies and gentlemen, was this a bad experience? Well, it was a frustrating experience, yes. But it was also educational. Because look back here, and what did we learn? Number one, the double bottom turned out it did work. Oftentimes, it comes back and tests. We broke out. We failed to hit our target by a long shot. We failed to hit our target. It came back. We probably got stopped out because, honestly, even though we're not working on stops right now, you should have had a stop right up about in here. You would have gotten stopped out here. You would have had a loss. And then you might have gotten upset as it started to go the other way. And then as it started to plummet, you would have said, good thing I had the stop in there. This is just experience. This is not good or bad data. This is just experience. Do you guys see how this is working? It's just data. There's no failures. Nobody failed here. This is real world. This is exactly what happens in the real world. And so if this had happened to you in the real world, a lot of people would have been hurt. And they would have said, oh, I can't believe I lost some money there. I really thought this was going to be the winner here. Well, what's another way of looking at this? Another way of looking at this is perhaps I'm ready to go short again, or perhaps I do have higher highs and higher lows. Perhaps I've got a new trend here. Let's just reset the trade up. I mean, we got stopped out. Let's just set the trade up again, okay? So if the trade comes down here and, maybe below 30.05, we'll go bearish just in case it is turning bearish. But, if this thing continues, maybe back up here about 31.60, about where we started, we'll go bullish again, okay? And let's see what happens. The next day, we traded right down here, and the bulls came back in. And, there we go. We're back into a bearish trade now, 30.05. Let's see if this bearish trade, ladies and gentlemen, look what happened. We got into a bearish trade with a neutral attitude. We were just seeing what would happen. We drew a bracket. We didn't say it's got to go bullish or bearish. We're not trying to think too much about the trade. We're just trying to bracket the trade and see what happens. Well, it turns out we went bearish at 30.05, and it turns out that if we were looking back here, we drove right back into our previous support. And as we add our candles and the other things you've learned, you'd say, oh, spinning top at support. Oh, that's important. Do you guys see how you're learning to trade by walking through this stuff? Going from corner to corner, looking at the details of your trade, learning to recognize chart patterns, starting to pull all the aspects together, learning to become a good trader. Now, this is going to take you time. That's why most people don't do it. Most people won't do this because it takes time. Most people want to get rich quick. And get rich quick is cool. But being a trader is not about getting rich quick. It's about learning a skill set. It's about learning a skill set, okay? Now, I'm not going to take all the time to identify patterns because we just don't have time tonight to work on patterns. What I can do is work on candles. So let's start going into candles. Candles are really easy. Candles, you can go day by day and start naming candles. Right now, can we name a candle? Yes, we got a spinning top. Okay, cool. We got a spinning top here. Next day, we got a little white candle, but kind of has a long